Hello, my fellow investors. My name is David, and I'm a value investor. Let me share with you my journey, how I came to where I am today. After the financial crisis back in 2008, I really got interested in the stock market. Like all newbies, I had no clue what I was doing, but the only tool I had was common sense, and my basic common sense was buy low, sell high. That's what everyone knows. So that's how my journey investing started. I looked for stocks that crashed a lot, and I bought them with the hope of selling them higher. I came very fast to the realization that the stock market didn't exactly work with common sense. I remember my first shock when Bank of America stock went soaring up after it reported a loss of $800 million. And I was thinking to myself, why in God's green earth is this stock up when it just reported a huge loss? I learned very fast that the stock market isn't exactly common sense. It's a big jungle, and it's not true that whatever goes down will eventually go up. I remember one of my first stocks that I bought was Sears Holdings. I bought it like in the 70s after it crashed down from like $200 or something dollars. And we know today that it went bankrupt. There's nothing left out of this company. One of my big mottos in life is learn from every failure. A failure isn't a failure. It's actually the path to success. If you do the same thing again and again and you fail again and again, you didn't learn. But if every time you fail, you learn something new and you learn how to prevent the next failure, then you became better at what you do. It's true in every single aspect in life, but in the stock market, it's absolutely crucial to learn from every failure. I started trading in stocks, then I expanded to options and futures and forex, and slowly but slowly, I was learning more and more. I also studied technical trading, and I never traded based on technical analysis. The reason for that is because the way I'm wired is I can only invest with common sense. I can't invest in something that I don't understand. I don't understand why a stock would go up or down based on this analysis. So although I know that a lot of stocks would move because a lot of traders trade on these methods, but I just can't do it. I can't do something that doesn't work with common sense. After a short time after I started trading, I was with a friend in the bookshop, and he showed me two books in the stock market. He knew that I was in the stock market and I was trading, and he told me, listen, these two books are very, very famous books in the stock market. One book was The Reminiscences of a Stock Operator, and the other was Benjamin Graham's book, The Intelligent Investor. So we decided, let's buy both of these books together. Each one will take one book home, and after we finish reading it, we'll trade the books, and then we'll read the other book. As things turned out, I took The Reminiscences of the Stock Operator first, and he took The Intelligent Investor. I was totally fascinated by The Reminiscences of the Stock Operator. It's an absolutely fascinating book. I read it twice, and I recommend anyone who's trading or investing in the stock market, you read this book. It's absolutely amazing, even if you don't go by the way he operated, but it's absolutely amazing. It's fascinating, and the story itself is absolutely crazy. So as things turned out, only a long time after I first knew about Benjamin Graham's books, I actually read it. And I think it was all for the good, because at the point of time when I came to read Benjamin Graham's book, I was like, I gained a lot of knowledge already from the past years. And I was like a land plagued by drought, just yearning for water. So when I came to read his book, I was like soaking in up all of Benjamin Graham's wisdom. It was just amazing. I was like soaking it in, and like every single word it was amazing. I read the book twice, and I knew right away this is my path forward. Right away I went and I bought Benjamin Graham's book, The Interpretation of Financial Statements. I knew I have to learn how to read financial statements, and that's my next step. So slowly but slowly, I was learning how to learn financial statements. I was gaining a lot of knowledge, and that's where I came to my next step. So although I was slowly turning into a value investor, I was still a speculator. I was still wired like a speculator. My head would think like a speculator. I'm buying a stock to sell it higher. And what Benjamin Graham's books did to me in the first change was that I turned into a speculator that based his speculations on value. I didn't just buy a stock because I think it's going to go up. Before I bought a stock, I checked the annual reports. What's the company structure? Is it in a good position? Is it in a bad position? I started checking a lot of fundamental things before I speculated on the company. But in the next few years, slowly but gradually, I was turning more and more into a value investor and less of a speculator. Like the big differences came in. I didn't need to check my stock price every now and then. It didn't bother me at all if the stock price went down. I knew the value that I'm holding. I didn't care about the stock price. The truth of the matter is that I was still missing a very, very vital piece in my understanding of value investing. And that was still holding me back from turning into a pure value investor. The person who gave me the final push was Peter Lynch. For years I knew about him, I knew his success, but I didn't know his basics in investing. I didn't know his theories, I didn't know how he worked. One day I was roaming on YouTube and I saw a video of his lecture and I was absolutely fascinated. In a very short period of time, I watched a lot of videos, lectures, audiobooks, whatever I could find from Peter Lynch. I was like gobbling everything up. So you see, what Peter Lynch gave me that I didn't have till then was the point of understanding the story behind the company. Peter Lynch puts a very, very strong emphasis to understand the story, to understand the industry. You can't buy a company without understanding the story. So until now, by reading Benjamin Graham's book or learning things about Buffett and what he did, I always got the feeling that everything's about the numbers. If the numbers are like this, if the numbers are like this, if the ratios, everything was about the numbers. What Peter Lynch gave me was that you have to understand the story. So I'll give you an example. Every investor would agree that you need to understand in what you're investing, and the numbers aren't enough. Let's say no one has to be a genius to understand that at today's day and age of digital media, buying a newspaper isn't exactly the best investment. Or buying a brick and mortar store when e-commerce is on the rise, you need to tread very carefully and you need a lot of caution because the past does not reflect the future. Everything is changing. So that's something everyone would agree upon. But what Peter Lynch gave me was the true understanding that in every single value investing, you have to understand the story. You can't just base yourself on the numbers. Even if you know the industry, even if everything looks good, you have to understand the story. And let's say, I'll give you an example. If you buy a company and it goes 1 or 2 quarters, the numbers are bad. And if you only went till now by the numbers and you didn't truly understand the story, you wouldn't know if these numbers are a time to sell or maybe it's opportunity to buy. Are these 2 quarters a bad sign that something is fundamentally changed in the company, or is this a temporary glitch? But if you understand the story, you have a much, much bigger chance of getting an educated conclusion. Is this a temporary glitch or something fundamentally changed in the company? So basically, my 3 mentors in value investing is Benjamin Graham, Warren Buffett, and Peter Lynch. Benjamin Graham is rightfully called the father of value investing. He built this whole value investing. Everyone learned from him. Warren Buffett and Charlie Munger took Benjamin Graham's basic wisdom and they took it up a huge notch by adding on growth and the power of compounding. Peter Lynch, for me, was the power of understanding your investment, to understand the numbers, to understand the story, that the numbers are not enough. So that's my 3 mentors in value investing. Now, here I came to a conclusion that there are 3 kinds of investors. And the way I categorize them is the average investor, the good investor, and the great investor. The way I look at it is like this. The average investor will earn something like a 10% a year. The good investor will earn between 10 to 20% a year, but the great investor will earn 20, 30% and higher. And the difference between these investors are like this, the way I look at it. The average investor is someone who isn't willing or can't put the time and effort to do the research on their investments. Typically, these investors will invest in simple real estate or just index in the stock market. The good investor is someone who is willing to invest time and effort to do research on their investments. They're good at what they do, but they aren't great. So what's the difference between a good investor and a great investor? The way I see it, there's 2 basic differences between these 2 people. The great investor is willing to put in much, much more research and much more effort into their investments. They're willing to check out more points and different aspects that the good investor just overlooks, doesn't think about it, doesn't care about it. The good investor, he checks it in, he does his research, but he wouldn't put in the extra effort. But the biggest difference, in my opinion, is the difference in people in the entire world. The great investor they carve out their own path. They don't just copy what Warren Buffett says or what Warren Buffett does. They will invest a huge amount of time thinking, why is this better than that, and why is this calculation the right way to calculate a certain ratio? Maybe it could be done differently. They come up with their own calculations, their own ratios, and they try to figure out why this and why that. But the good investor says, okay, this is what Warren Buffett does, I'll do the same thing. So you see, there's no 2 people in the world that are alike. And there's definitely no 2 great people alike. You can't compare the best basketball players or the best baseball players to each other. Everyone is unique and talented in a special way. You can't compare the best doctors or lawyers or anything in the world. and you can't compare the best investors in the world. Every human being in the world is unique. Everyone is special in a different way. Everyone has a different talent, a different skill. Everyone is wired differently. A great person cannot become great at what they do by being a copycat. They have to carve their own path in life. So here is my next chapter in my investing life. As I roamed in YouTube, I saw a lot of videos on value investing, and a lot of them are great channels with a lot of great content. But I didn't find a channel that did deep analysis on stocks, kind of what I was doing. So I decided to open up a channel and post my videos. My main goal is to learn. I have to do a lot of research for each video I post. And I'm sure I'm going to learn a lot from you guys in your comments or any other way. And if I can earn a nice buck or two on the way while learning, well, that's the best of the best. Also, to get paid and also do what you love to do, that's the best. So I hope you enjoy riding along with me in my quest to learn more and more, and I'm sure I'm going to enjoy you. Thank you very much, and I hope you enjoy my videos.